And for commodities market update, I'm being joined now by Temitope Olugbile, one of the research analysts with Financial Derivatives Company. Temitope, good morning. Thank you for joining us.
Good morning, Mpc. Thank you for having me.
Now, today is Mpc Decision Day, and for you guys, the FDC, you say status quo is most likely. Why?
Yes, we do. So yesterday is the conclusion of the Mpc meeting, and there'll be a lot for them to chew on because since the last meeting, some key economic data have been released. First, we see that Q2 GDP fell much sharper than we expected to -6.1%. We see that inflation is now more at a growth retarding level, which is higher than 12%, is 13.22% now. We see that unemployment is at 27.1%. So these key economic data means that they have a lot on their minds. And why we say that it will be most likely status quo is because we see that the different policy directives that have come out since the whole COVID pandemic, there's some kind of a time lag effect to how it plays out in the economy. So we expect that the committee is most likely going to maintain status quo to give more time to see the effect of the different policies, especially credit on the credit side of things, credit to the private sector. Even though we know that the banks are also under a lot of pressure in terms of keeping a lead on their loans because of the economic fallout and the pandemic impact on businesses. But by and large, we expect that the committee would maintain status quo and give some more time to observe some key market fundamentals.
Now, looking at the macroeconomic variables you did mention, negative growth rate, high unemployment rate, high inflation rate, FX squeeze, and so on, what do you think amongst these would be the key consideration for the committee members, and how would that determine the final outcome?
Okay, so we believe that Nigeria and policymakers at large are in a quadrilemma. We have four key issues that are really squeezing businesses and really impacting on how fast we will recover from this recession. We have the rising inflation, GDP contraction, currency weakness. We have these key issues affect our rising unemployment. So those four key issues are affecting, the economy. And we think that these are the four issues that the committee is going to be focused on, But by and large, the committee, so the NDC committee is their key mandate, right? Price stability. So that is really what they should be focusing on. But because the ripple effect of different policies, both on the monetary side and the fiscal side, they have ripple effect on the economy as a whole. We expect that they will also keep their eye on, the contraction in GDP, rising unemployment, and the currency weakness, currency rationing, and how we've seen the currency go all the way to 475 naira per dollar. So these key issues will be on their minds.
Now, many have called for the reduction of the CRR from 27.5%. Do you see that perhaps happening this time?
I don't. I really don't, because yes, there's a lot for the banks. There's a lot happening on the banking side of things, but I think that the committee is still trying to see the impact of the increase that they gave, the increase to CRR that happened a few months ago. So I don't think that there will be any change in that direction. If at all, the MPR, which we are already projecting, will most likely be status quo.
Now, whichever way the decision goes, whether hawkish or dovish, what will be the implications for the domestic commodities market?
So because the markets have really priced in, I would say that markets have really priced in a status quo. I don't, foresee any significant shift or any significant policy direction that will move the needle as such, or it's either it's not enough to move the needle, or there will be some time lag effect before you actually see some changes in the market. So for the short run, I don't expect that any decision would impact the market greatly.
Now, looking at the global oil market space, the price of Brent has dropped significantly, and we've seen the possibility of Libya resuming production. How much of a threat is it to oil-producing countries and Nigeria in particular, given that Nigeria's production is down already?
Oh, it's a big threat to, the moves that OPEC has been making to try on the supply side of the oil market since the pandemic. We see that, OPEC has consistently called out members that are producing above their quota. So for Libya, that hasn't produced at a very now to, come out with this news of an increase in their production at a time of weak demand. We're already having some concerns about demand recovery. I believe there will be another lockdown in some key, oil using or used, countries. So it's not a good time for for OPEC, and it might shift. I expect that it will shift some OPEC decisions. It have an impact on OPEC decisions because that is a significant increase in supply at a time where the oil demand and supply dynamics are still not where they were pre-COVID. So it would have an impact in OPEC, and it would be something for OPEC to really look out for.
All right. Meanwhile, back here, facts disbursements are up 0.84% to on higher VAT collections and other royalties. What does that tell us? We can do without oil money, right?
So, I mean, it shows a trend. We see that for Q3. So this fact disbursement that came out was September. So on average for Q3, we had that, fact disbursement was about 669 billion naira, and that's up 3.89% from what it was in Q2. And, we, of course, it's coming from a low base because oil price in Q2, that was when we saw the significant crash, in oil price negative. So, it was really coming from a low base where we see that, that's good news in terms of, states that are in their need of, funds from the federal government and, for both capital and recurrent expenditure. So we have that positive impact of good news for today, yes.
Now, we've also seen more steps taken by the FIRS to boost collection and broaden the tax net. The latest of such initiative being what they call the self-certification exercise. What do you make of that at FDC?
So I mean, at the time of revenues as at an all-time low, we expect that the government is looking for different ways to boost its revenue from taxes and from other states, thinking out of the box to boost revenue. But the main thing for them to really look out for increasing the tax collection. It's not a time to put more taxes across board because that is already see that impact in Lagos. Some businesses in Lagos already feeling the impact of multiple taxation. So it's really time to just hamper down on your tax collection. Have technology, have those initiatives, boost your tax net and your tax collection. That is really what to be focusing on right now to boost your revenue and to prevent people circumvent.
Now, looking at the development in the Forex market, the CBN has come up with a raft of new guidelines and investigation into activities there. Do you think that this will help stabilize the Naira or create more speculation in the market in the short to medium term?
So I think right now, like you mentioned, it's really the speculative demand that is having an impact on the Naira, right? Because we see that, as we open up the economy more, we see that increased forex demand. And on the side of the CBN, we now see that there's forex rationing. But as it's really just the impact of these policies on the signals it sends to investors, right? Because investors are stuck. We've seen reports of investors stuck with money because they cannot repatriate their funds because there's no forex available. So there's that signaling effect that you're sending to investors who you need their inflows right now. You need their dollar inflows. So it's that we understand that there's forex, there's a need to ration the forex, but there's also need to clear your backlog. Yeah, I think that's the first thing to do. As more demand, as the forex demand increases, first of all, clear the backlog that has accumulated over the month. That would significantly ease the pressure, the forex demand pressure. I think that's the first thing and the most important thing for them to do now.
All right, let's look at commodities. While the price of Brent is falling, the price of cocoa, Nigeria's major agri-export, is going up. Soybean price is also on the increase on the global commodities market. What do you think Nigeria can do to take advantage of the present situation to increase its non-oil revenue?
Okay, yeah, it's important to mention that because before Nigeria can take advantage of these increased prices in, say for instance, cocoa, which is which is a key non-oil non-oil commodity, there's some key things for it to do. So we say that, in agriculture, has been like increase in the farm gate price. Basically, farm gate price is just the price paid to the farmers for their commodities. And at the time when these farmers are already dealing with the COVID impact, it's that increase is basically just to ease the pressure on them from the COVID impact. But Nigeria can really benefit from this increase in one of its key export commodities. There are key issues for it to resolve, like border closure. Your exchange rate has to be competitive before you can enjoy, these benefits. You have to invest in, the agri sector, and this you see an initiative from, the CBN, directing banks, increase loan to the agri sector to 10%, to increase their loan exposure to the agri sector to 10%. So, we need to see that impact. That impact needs to manifest before Nigeria can really start to benefit from an increase in cocoa price.
Now, looking at the commodities price movement, what are the factors driving prices at this time, and what is the outlook as we gradually approach the festive season?
Okay, so we say that, there's still the harvest season playing out in some commodities. We see that, there's also, we would soon start to see the impact of, unfavorable weather conditions on, commodities like rice. We would also see the impact of, the maize initiative, giving exemptions to 4 companies to import maize. We'll start to see that impact on the maize side. There's, these are some of the key factors that are playing out. As we go into the as we approach the festive season, we also expect, the policy pronouncements like the electricity hike, the higher PMS price to start also impact on, domestic commodity prices. And, that as we see some places like rice increase, as the prices of rice increase, we may start to see the cost elasticity impact where people, switch to, substitutes like spaghetti. Like last year when the border closure was really impacting on rice price, we saw, some corporates as they did their Christmas end of year package, we saw that kind of switch to other commodities because of the cost elasticity impact. So that's what we expect as we festive season.
Right. Talking about the electricity tariff and, of course, the increase in petrol price, transportation fare, according to the NBS, of course, has gone up significantly. How much impact do you think that would have on food and headline inflation for September and perhaps that of October?
We expect that it will have an impact because this policy pronouncements were, beginning of September. So, we already have food inflation above 14% presently. So we see that, as higher PMS price means that before commodities can be transported from one market to another within the Lagos metropolitan city, we would see that, increase in commodities. We'll see that transfer of the burden to consumers. So we expect that would, these pronouncements would have an impact on inflation, and we're already seeing some commodities already increasing in price because of the policy announcements.
All right, looking at one of the downers you have there, you say Emirates ban could affect air freight and cargo. Could you expatiate on this?
So yeah, we see that the policymakers have banned some carriers from entering into Nigeria. One of such carriers is Emirates, and because Emirates is such it's in high demand by both traders and tourists. Dubai is a hub for Nigerians, let's put it like that. And we already see that. So that would have an impact on aviation and the trade sector. These two sectors contracted. Aviation contracted by more than 40% in Q2, and it's still, load factors, even with the resumption of domestic and international flights, load factors are still not where they were pre-COVID. So we expect that would have a significant impact on both sectors, both trade, because Emirates is in high demand by Nigerian traders. So that would have an impact on both trade and aviation sector.
All right, thank you very much for your time. Temitope Olugbile, one of the research analysts with Financial Derivatives Company. Thank you for your time.
Thank you.
We'll take a break, and when we come back, we'll look at the latest development on the Africa Continental Free Trade Agreement. Just stay with us.